Did you know that banks are only required to keep a tiny fraction of your money in reserve, sometimes as little as 2%, and the rest they invested to make massive profits with your cash? And while they multiply your money for themselves, you are stuck earning close to zero interest, watching inflation quietly drain your savings. This video is for anyone who is tired of working hard, saving hard, and still not getting ahead financially. Here's what you will learn: a clear understanding of how banks really make money, how this entire system works, and how you can flip it to start building real wealth for yourself. Number one, what really happens to your money? Most people think that when they deposit money into their bank account, it's safely stored away, maybe in a big vault or a digital account waiting for them. But that's not how the banking system works at all. Banks operate on a concept called fractional reserve banking. That means they are only required to keep a fraction of the money you deposit, often 2 to 10%, depending on the regulation and country. So if you deposit $1,000 into your account, the bank might only keep $20 to $100 in reserve. The rest is used for other purposes, primarily to make more money. Banks will loan out your money to other people, charge them with interest, and generate income of your deposit. It could be used for mortgages, personal loans, credit card, business lending, anything that brings them a return. But it doesn't stop at lending. Banks also invest your money in ways most people never heard about, like in life insurance policies. Yes, the same banks that tell you to save your money safely are using it to make tax-advantaged profits through something called bank-owned life insurance. What is BOLI? Bank-owned life insurance, or BOLI, is a form of permanent life insurance purchased by banks on the life of their employees, often senior executives. But here is the kicker: the bank is both the owner and the receiver of the policy. When that employee eventually passes away, the bank receives the full death benefit, but they do not have to wait decades to benefit. Here's why banks love BOLI. The policies build cash value over time. That cash grows tax-free. Banks can borrow against that cash value to fund operation, pay bonuses, or boost balance sheets. When the insured person passes away, the payout is typically tax-free. It's essentially a high-yield tax-free savings account for banks, one that also provides a death benefit later on. According to the data from the National Association of Insurance Commissioners and FDIC, US banks hold over $200 billion in BOLI. Major banks like Wells Fargo, Bank of America, and JP Morgan Chase have disclosed holding billions in BOLI on their balance sheets. So while you're earning 0.01% interest rate, your bank is quietly raking in 6% plus returns inside a life insurance policy you never ever heard of. If you like this video so far, please don't forget to like and subscribe so we can help more people. Number 3, the deeper history and power behind this strategy. Let's go a little bit deeper into how fractional reserve banking started. The system was once introduced centuries ago when goldsmiths would issue receipts for gold held in vaults. Over time, these receipts became circulating as money. Goldsmiths realized they could lend out more receipts than actually gold, because not everyone would redeem at the same time. And that is how modern banking was born, lending money that doesn't physically exist. Fast forward today, banks operate similarly. When you deposit money, they record it as a liability, but instead of storing your cash, they loan it out or invest it to earn interest. This is how banks turn your deposits into assets for themselves. It's also why banks collapse during panic withdrawals, because they don't actually hold your full deposit. Now, about bank-owned life insurance. BOLI isn't just an income stream, it also enhances a bank balance sheets, because life insuring cash value is considered Tier 1 asset. It improves a bank's capital ratio. In other words, BOLI helps banks appear more financially stable while generating tax-free income. That is a strategic double win. Historically, mutual insurance companies have been offering whole life policies with guaranteed growth since the 80s. They are not trendy, but they have quietly built generation wealth for families who understand how to use them. Infinite banking isn't new, it's just hidden from the mainstream. Even politicians and wealthy business owners use whole life policies as a collateral for loans, to buy real estate, or fund campaigns. Walt Disney famously used his life insurance policy to fund Disneyland. J.C. Penney used his policy to save his company during the Great Depression. You're not just saving money, you are reclaiming control, and that's the mindset shift. Why haven't you heard this before? Let's be honest. If BOLE is such a powerful tool, why isn't it a public knowledge? Because banks don't want the average person to think like them. They don't want you to understand how money works. You are taught, go to school, get a job, save money in the bank, and retire at 65. This is a script, and it's not designed to make you rich. Meanwhile, banks are leveraging your saving, earning tax-free profits to BOLE, building wealth while keeping you financially blind. And this isn't some conspiracy theory. It's just how the system works. 2023 Federal Reserve Survey of Consumer Finance showed that the bottom 50% of Americans hold nearly all their wealth in cash or low-yield bank products, while the top 1% hold the majority of their wealth in assets that compound. Stocks, real estate, and yes, insurance vehicles. You have been conditioned to stay safe and avoid risk. But safety has a cost. You stay broke. What can you do about it? So the obvious question, if BOLE is for banks, what can you do? The answer is build your own banking system using something called high cash value whole life insurance, also known as the infinite banking concept. This strategy allows you to store money in a tax-free advantage life insurance policy, grow that money year over year, borrow against it without triggering taxes. Use it for personal expenses, investing, or debt payment. It's the same playbooks banks are using, just adapted for individual. Here's how it works. You apply for a whole life insurance policy, structured specifically for maximum cash value. Each time you pay a premium, a portion goes into the cash value. That cash grows at a guaranteed rate plus dividends depending on the insurer. You can borrow against your cash value at any time. Your money keeps compounding even when you have borrowed from it. Unlike a saving account, there is no bank manager, no loan and no approval, and no credit check. It's a private well-being machine in your control. An example, how it helps. Suppose you set up a high cash value policy and contribute $500, that's $6,000 per year. By year 5, you could have around $25,000 in cash value, depending on your age, health, and insurer. Need to invest in real estate? Borrow $10,000 from your policy. Need to pay off debt? Use your own policy as a lender. Let's say you borrow $10,000 from your cash value at 5% interest, but your policy is growing at 6%. That means even while you are using the money, you're still making a profit. It's a double due to capital. Your money is working in two places at once. And even better, when done right, this can become a retirement vehicle. Your policy can provide tax-free income in retirement through policy loans. And here's the catch. If you die, your family still gets a death benefit, even if you borrowed. That's why the wealthy love this strategy, and it's not just about protection. It's about control, cash flow, and compounding. What's the first step? This isn't about getting rich overnight. It's about building a system, a private wealth engine that grows quietly, tax-free, and in your control. Here's how to get started. Educate yourself on infinite banking and high cash value life insurance. Speak to a licensed advisor who knows how to structure policies for bankings and not just for commissions. Start small. Even $250 a month can lead to serious growth over time. Think long term. This is a 10, 20, and even a 30-year play. And remember, you're already giving your money to a bank that uses these tools. So you might as well become the bank yourself, because the banks aren't smarter than you. They are just playing a different game with rules you never got to read until now. If you want to know more about the rich and their quiet way of building wealth, watch this video.